Hi there, this is from Get Data Solution. Today I will see break-even analysis for our products. Here you can write product name and product price. Here set to 300, and here is the fixed cost. And for this particular case, I have used random number between 30 to 100, and here is the variable cost and the variable cost percentage and total variable cost in amount per unit. Once I fill this, just I'll get here the summary. The fixed cost is here 407 from the fixed cost table, and the variable cost per unit is also obtained here from variable cost per unit. And here is the contribution margin, which is the difference between product price and variable cost per unit. And then once I have filled those data, and break-even unit will be at 6, and break-even sales will be at 1800, and a similar figure is actually indicated here in the box here for break-even unit 6 and break-even sales 1800. I can see the same for in this break-even analysis table, where the unit is at 6 and the profit will be 73 in this case at that unit. If I change, for example, this random number, which I've taken it between 30 and 100, now the fixed cost is changed here, as you can see, to 602, and then variable cost is as it is, and total variable cost in amount per unit is 220. And because of that change, this change is observed here in fixed cost. Here is the variable cost, contribution margin 80, and then break-even unit is calculated as 8, and break-even sales is here recalculated as 10400. And we can also see here in the box break-even unit is 8 and break-even sales is 10400. If you go to the table again, we can observe similar. Here our break-even unit will be at 8 this time, and the profit at that point is 38. So this is a very beautiful break-even analysis for your business, and you can use it for your business, this table, and we recommend it to use it for your business to get break-even analysis. And thank you, and please subscribe for this channel if you like this video.